It is Saturday, the 2nd of November. This is Jason Sent at Day Trade Ideas. I am going to do my weekly video now. This is the US dollar index, which has been really difficult to trade over the last year, really. As you can see, since November last year, we've pretty much just gone sideways. Through September, we managed to break a little bit higher, and I thought that was the start of the next leg higher in the bull trend, but it wasn't to be. We reversed, and so we pretty much remain in a sideways trend. Now then, if we zoom in a little bit on this dollar index, you can see that the 100-day moving average is now acting as resistance, which is kind of what it should have done. The 200-day moving average was acting as some sort of support, weak support, because we did break below it and then go back up to retest the 100-day moving average. But now acting as resistance, so there is a downward bias to the US dollar. We have got the longer term 23.6% Fibonacci level at call it 9700. So a break below 96.90 will be the next negative signal, and I don't think that level is as important as the 200 and the 100-day moving average. So what I'm saying is I think that's weaker, and I think that the risks are increasing to the downside for the US dollar. We've got a little bit of a trend line down here at, where is it now, 96.50. So I would imagine that would be the first target. And then we've got some better support down here around 95, 85. So there are quite good downside targets, which I mean is there's quite good potential movement to the downside. I don't really see strong support then until 95.30, which is where we've got the 38.2% fib and the 500-day moving average, but we'll review that nearer the time. It could possibly take a whole month to get down there. Clearly, we're going to have to get up through 97.50 and then 97.90 if the bulls are going to take control. Then we've got this trend line up here at 98.20. So there's quite a few hurdles for the bulls to get through before they really take full control. And I would suggest they're not really in full control until we're at least through 98.30. I'm going to keep that potential dollar weakness in the back of my mind and make sure, and as we go through the rest of the chart. So Aussie versus the US dollar. Now, this has come to quite a critical area, as you can see. So we've been in a bear trend for a long time, since, well, the beginning of 2018. So getting on for a 2-year bear trend. Zooming in a little bit, you can see now this is looking a little bit positive. We spotted the fact that there was some buyers coming in down here with these long candle wicks. So we turned a bit bullish at the beginning of the month, and that's worked out. We're starting to accelerate to the upside now. We're through the 100-day moving average, the blue one, which has now acted as support since Wednesday. We pushed higher. Not such a good day Thursday, but we were helped on Friday. We managed to push higher again. So we've got this trend line. This is what's key at the moment. It's really holding it. Going back to December of last year. So it's a 11-month trend line coming in at around 69.25. So you can see it's done the job perfectly this week. So it's quite a significant trend line. It's been touched, well, almost there. So 1, 2, coming up for the third test. Now, if we are overbought as well in the short term. So it's key. It is holding at the moment. If we break higher, we've got to beat the 200-day moving average, which is currently around, say, 69.55. Through there, that's going to be a nice buy signal, and that would then tie in with potential US dollar weakness, of course, because the Aussie would be pushing higher against the US dollar. So if you want to try a short position around 69.25, 69.30, it's a tight stop. You could put a stop in at 69.60. If it works on the downside, we're looking at 68.50 pretty much as the first target. So there's decent profit potential. If we fall further, we've got pretty good support around 68.00. I'd certainly be taking off any remaining shorts at that point. And then if you are short and you do stop out at 69.60, you want to be looking to reverse into a long and hoping that the pair hold above 69.20, and then we really could push significantly higher. I think we can count this as a double bottom, maybe even a triple bottom, really. So the fact that we are now moving above this point here at 68.90 completes the double bottom and gives us the buy signal, and that means we could rally from here another 200 pips. We could get up to the sort of 69.00 area, really. Sorry, what am I saying? We could get up to the 71.00 area, the 0.7100 area, which would tie in quite nicely with this July high around 70.82. So I would wait until we break 69.60 just for the confirmation, because at the moment this is quite strong resistance. but that it does tie in really with a potential weaker US dollar once we get through there, and it looks like we could do that this week. Now, the New Zealand dollar versus the US dollar is also looking actually more positive, if anything. I think this is an inverse head and shoulders pattern. So there's the left shoulder, there's the head, and in fact, we've actually almost got a little inverse head and shoulders pattern within that head, which is something that you very, very often see. This is the right shoulder in the bigger pattern, and it's a nice pattern. It's spread over 3 months, so it's significant. We've got to pay attention to it. Now, we struggled to get through the neckline, which is at 64.30. We did get up to 64.55, but we didn't close above it. So a little bit of confusion. We may just pull back. You can see the 55-day moving average is really doing a great job there as support and resistance. Resistance here, support here, of course. Again, 100-day moving average, which is declining, which is at the moment around 64.63. So by Monday morning, it'll be around 64.60. Once through there, that does give us the green light. That does give us the buy signal, I would suggest. The measured target will be something in the region of 230 pips on the upside from the neckline. So that takes us up to 66.60. So we can easily test the 200-day moving average at 65.90, and we've got the 61.8% fib at 66.56. So that ties in very nicely with that potential measured target. Dollar yen is trickier, but we do seem to be building something of a bullish pattern. There you go. We're clearly building call it a 2.5 month bull channel. Now, we've just retested that channel down here. So that's worked really, really nicely, 107.90. We had some support around the 108.15, 108.5 area, and I think I had stops below 107. Stops below 107.90, so we just about survived that with a low at 107.91. So if you're holding longs, it does look okay. Oh, actually, I'm seeing on Friday we hit 107.87, so that was a little bit tricky, but you can see we are actually holding this channel. So I think this is what's important at the moment. If we break low, we've got a little bit of support in dollar yen around 107.60, 107.50 from this trend line going back to May, which is also important, and that coupled with the 100-day moving average should make that area important enough. Break below 107.40 is what's going to act as our sell signal, because we'll have obviously bust through those two support levels. Now, assuming that we do continue in this bull channel, then we'll rally up from 108.00 to this week, probably back up to 109.00 really. This 200-day moving average certainly did the job. We did overrun it. We spiked through it on Wednesday, but that is the first significant hurdle for bulls. But if we get up through there and up through the less important 61.8% fib at 109.35, then that's going to be bullish as well. And look, we can really head up to 109.90 and then of course 110.00. Euro yen not so clear. Pictures certainly not so clear. We've done all right in this actually. We spotted that there was strong resistance up here, and that continues to work. So the shorts are working. You can see that we're just stuck in this range. We're pretty much stuck in the range indicated by this candle around the 121, 40, 50 area and down at the 120, sort of 20, 30, 20 area. I don't know what to make of this now, so I'm just going to leave that. The euro US dollar is also quite difficult to read. We spent such a long period of time trading sideways, similar as you saw in the dollar index, which of course the euro is a big part of, so that's not really a surprise. I better try and decipher something from this chart, seeing as it's a major pair and many people like to trade it. So, zooming in on things, you can see where the trend lines are. This looks quite positive. The fact that we've broken through that trend line going back to, better just see where that goes back to. It's quite a significant trend line because it goes all the way back to January of this year. So it's a 10-month-old trend line. We've now managed to break through that, and that area was coupled with the 100-day moving average. It was a bit messy on Wednesday when we broke above it, but we're through there now, and this is now acting as support down at 111.20, sort of, let's call it 111.25.20. The next hurdle for bulls is at 111.90, 112.00 with a relatively minor trend line up there. It's only a month and a half old, but also the 200-day moving average. So I'll feel pretty bullish above 112.00. Happy to buy it down at 111.25, 111.25, 111.15 with a stop below. Give it a stop below 111.00. I think 110.95 would be the place where I would put my stop, I think. Not the best trade opportunities, but they're pretty good levels, I guess. Below 111.00, I would be short. Above 112.00, I would be long. And then, of course, just trading those levels in between. So a pretty simple strategy, actually. Dollar Swiss is showing some potential trade opportunity here. Right, this is the weekly chart. You can't see anything on the daily chart. But if you look at this, I've zoomed in now just to show the last couple of years. We've got really good moving average support, 100 week, 200 week moving average support around the 98.50 area. We've got a longer term 38.2% support around the 98.35 area. And that's really, really worked well over the last 3 weeks. You can see we sank down there 3 weeks ago, rocketed the previous week, and then last week we've come down to retest that. So it's got to be worth trying a long position with a stop below 98.30, maybe 98.20 just to be sure. It's a weekly chart. We could just, a spike down to 98.20 would hardly be visible on the weekly chart. But certainly if we do start breaking below 98.20, that would be a sell signal for obvious reasons. So this really is a key area, worth trying along. Watch it carefully, stop and reverse if we break lower, because then we could be headed down to, we could even be headed down to 97.20, 97.10. So there's good downside potential if we have to reverse into a short, but there's certainly good upside potential. We could be looking at easily 100, 150 pip profit on a long position over the days and weeks ahead. Okay, that's the end of the Forex report. Just one thing I want to show you. If you don't have time to follow my signals as a subscription, so many subscribers tell me that they just don't have, they like what I do, they just don't have time, they're working, they've got other commitments. So finally, I've decided to set up a copy trade service where I'll do everything for you. You keep all the profit. I'm not interested in a profit share. I'm not interested. I don't. What I do charge you is a monthly subscription fee of $1.99. So for that reason, you may want to think about putting in certainly £5,000, maybe £10,000 in order to make sure that I can make 2% in order to cover your £199 subscription fee. But as I say, all the profit you keep. If you want to go ahead and open an account, you need to just look at this link. Go to my Twitter feed, to my Twitter account, which is @DayTradeSignals, and then you can just see that at the top of my profile. Click the link, you'll be able to open an account, and once you've opened the account, let me know. I'll show you how to pay the subscription fee. I'm likely to waive that subscription fee for the first month, just so I can try to get some profit in the bank for my copy traders, and then after that you'll have to pay. You'll get this open a live trading account form. So just open the account, put some money in, let me know you've done it, and I'll take it from there.